Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time on this Friday.
Good afternoon.
Well, let's start with Wall Street, where stocks were down again. Earnings a bit of a mix, and of course there are concerns about growth. Treasury yields rose again to multi-year highs, so there's a lot of anxiety out there. What's the story in the global markets?
Yes, if you look at the Wall Street, it pretty much gave up the gains that showed in the earlier days. Dow Jones erasing 300 points to trade below 30,400. S&P 500 and NASDAQ dropped by 0.8% and 0.6% respectively. There's continuation of worry about the inflationary pressure, and it fears that the Federal Reserve would continue to stay in course of aggressive tightening, and pretty much snapped the optimism from the recent earnings report. If we look at the earnings statements by the companies, it seems to be coming in better than expected, and that caused the market to rise at the beginning, but gave up the gains because interest rate has risen well above, for the 10-year government bond rate, above 4.2%. Because if you look at the Philadelphia Fed President Patrick Harker's statement, he has said that interest rate will be raised to well above 4% this year, which means 75 basis point would get to 3.75 to 4. Another 50 to 75 would get to well above 4%. And then saying that hold them at such a restrictive level to bring down the inflation to its 2% target. So as long as inflation remains at well above where we are, the Fed chairs and Fed people are saying that interest rate will be well above 4% territories. So that is causing uncertainties. In terms of the corporate America, AT&T rose over 7%, IBM rose by more than 4%, because the earnings of both companies showed much better than forecast. And as for the Tesla, it dropped more than 6% because of the EV maker missing the Wall Street sales estimation and cut its vehicle delivery targets. All in all, earnings should provide significant upside potential if the earnings continue to come in better than expected. But macro picture seems to be continuing to be the uncertainty right now.
Well, here in Korea, stocks down as well, but not as big as the decline on Wall Street. Actually, a decent gain for shares of Samsung Electronics, SK hynix. Among the worst performers were construction, airlines, and shipbuilding. Tell us about the domestic market.
Yes, if you look at Kospi, it's down by 0.22%, and Kosdaq is down by 0.88%. In terms of the investors, foreign investors bought 22.4 billion won of Kospi. Institution bought only 19.5 billion. Retailers are the seller of about 70 billion won worth of it. Kosdaq, the foreign investors sold about 59 billion, and the individuals bought about 85 billion won or so. If you look at the market-wise, the electric battery-related, it was up about 2.5%, and the communications and IT sectors all showed a rising trend, but not that much. Overall, it seems that the inflation pressure in Korea seems to be way too high. If you look at the producers' price index, it seems to be showing rising by 8% plus. So clearly, this is causing the uncertainties. On top of that, we saw 10-year government bond yield surging above 4.4%, following the U.S. Continuation of raising interest rate trend. So we need to watch out what's happening to the macro pictures in terms of the maturity period. Korea is much shorter, so therefore the uncertainty on the market is much bigger than expected.
Well, finally, Mr. Yu, the Federal Reserve's Beige book report, to zoom out a little bit, it says demand in the U.S. is falling. Businesses are not optimistic about the future right now. A lot of headwinds, it points out, in fact, including rising interest rates, inflation, supply chains disruptions. What do you make of this report, Mr. Yu, and what do you see happening in the American economy?
Yes, if you look at the outlook on the economic growth, pretty much there's a pressure from the interest rate and also the supply disruption and elevated inflation numbers. And clearly, this is all causing biggest uncertainty for the market for the time being. If you look at the economic activities, it expanded modestly on net since the previous report. The outlook grew much more pessimistic because of the growing concern about the weakening demand. As you know, interest rate has risen quite significantly. The 4 years, 10 years government bond rate has risen well above 4%. It is hitting 4.2%. Clearly, inflationary pressure and supply disruption is causing that kind of uncertainties. So I think the market is continuing to focus on inflation and what's the Fed's target in terms of interest rate. It pretty much causing the economy to slow down at a pace. Of course, quite a lot of uncertainty about whether the recession could happen or not. But in terms of slowing down of the economy, it's definitely happening. We need to watch more carefully in the future how the economy plays out. It seems that the uncertainty continues to remain quite high in terms of the hiring side as well as the economic conditions.
All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for coming on the program. We appreciate your insights, and have a great weekend.
Thank you very much.